Okay, MegaWhale team, welcome back to the channel. Bitcoin has seen a pretty solid run up over the last week and a half to now retest yet again this major weekly downtrend and critical level of horizontal resistance at 89,000. These are the two levels Bitcoin will need to break through to officially reverse this now multi-month downtrend and result in a new uptrend developing. If we do not see a breakout of this level, we do still run the risk of a steeper and more aggressive correction as per our weekly chart. In today's video, we are going to be discussing why a major move may happen over the next 48 hours as Bitcoin is apexing between that weekly downtrending trend line and our uptrend spanning back since the 11th of March. We are going to be going over exactly what you need to know about both the short-term and the corresponding directional impacts a breakdown or break up may have on the macro charts. By the end of today's video, you'll have a detailed and well-rounded understanding of all the time frames from the short-term to the daily and the weekly, the targets, expectations, and potential consequences. Before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, you can join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in taking your trading to the next level, click the pinned comment. You can contact our admin by this name or our first and second link to find a 50+ month trading track record and a 10+ minute video showing you inside the VIP channel. You'll get access to two main channels, the main VIP channel and an exclusive group chat. We've been running for 50 to nearly 60 months since February 2021, and of course have over 700 members. You can check out the video to find out more, and we'll see you in those channels. Let's go ahead, guys, and jump into the content. So as we can see, Bitcoin has steadily been increasing over the course of the last 2 weeks toward that $89,000 level, which we've established a very clear uptrend on both the price chart over here and of course on the RSI. We can see with that rally toward the upside, we have not yet been able to crack through that weekly downtrend diagonal resistance, which is a representation of the current trajectory of the trend, as well as the prior major level of support being that of the level of support we've sustained above during this entire period of consolidation above that $89,000 region. We are currently now retesting that level yet again as a point of resistance, and in fact, on the daily chart, we can also see that 50 EMA has been acting as a pretty solid resistance ever since around about $100,000. So we have a few points of confluence over here at this diagonal apexing point or crossover point with that major horizontal resistance. Moving over to the market data, looking at our volume and liquidations, we'll come back to the charts in a second. Volume and liquidations are up a little bit, with volume up 7% at 187 billion over here. Liquidations up 55%, 265 million, with 186 million coming from longs and 78 million coming from shorts. This is actually a very large number in liquidations, considering how minimal amount of price action we've really had over here. I think a lot of people are preemptively jumping into massive long positions in anticipation of this weekly breakout, but again, confirmation is the insurance you pay to be right, and sometimes it's better to forego 0.5% to actually get that confirmation rather to be greedy and try get that extra 0.5% and then run the risk of a much larger loss. So in this instance, we can see the price action is getting very close to the apexing point. If we draw that line across, the apex happens just on the 29th, around midday, the 29th of March. So it's about 48 hours from now, we are going to see the apex. So by that point in time, we should have at least closed above or below one of these trend lines. We know already this being that weekly downtrend and this being this weekly uptrend will massively dictate the directional continuations on the short term for Bitcoin, a massive event coming up, which we'll be discussing in today's video, as well as the consequences of that. Moving over to the DXY, we've seen the DXY push up a little bit as we have recently had some more tariff news from President Donald Trump, of course. So we've seen the dollar rise a little bit over here, currently sitting at 104. Yet again, it is likely we continue to see this chop sideways as we push between that 50 EMA and that 200 EMA. It is likely if we do lose below that dotted trend line, we are going to see a continuation into those lows. If we break through the 50 EMA, we may see a continuation up back into these highs. But until then, we are not expecting either of these moves to occur. We are more or less expecting sideways continuation. Looking at the S&P 500, all in all, not looking fantastic over here. With 1 day and 22 hours remaining, we were unable to at least show some intraday strength over here at that prior level of resistance. As we can see, we've marked out a few levels. Number one, we have got our current level of resistance. This is essentially the resistance level which corresponds to 89,000 for Bitcoin. Essentially, the point of resistance we need to break above to confirm we are going higher, right? This is the most important point. If we're looking at weekly closing prices, ideal prices for the weekly candle to close, we are watching for at least, we need a minimum of a close above 5,756, which is going to be the opening price of that red candle. If we are able to get at least a weekly candle close above this level, we may push back into this range in the new week. But if we do not, we do run the risk of a correction much lower, potentially as low as 5,300. 5,330. So all in all, the current weekly candle is looking very bad. We need to break through this 5,750 level. We need to close above 5,750. And ideally, if we want to see the bulls really get back in control, we need to break above 5,860, which is going to be the lows over here, okay? And that RSI needs to flip. So we did see a pretty nice rally over here, but it has not been enough to break through these critical structural levels of resistance, which will massively shift the probability in favor of upward continuations. Now, ideally, we see this occur, but until we get that confirmation, the risk of these downward continuations are still possible. So let's go ahead and jump into the rest of today's analysis. Now, before we do, if you were interested in supporting yourself and supporting the channel even more, go ahead and sign up to the links down below, BitGet, BitUnix, or BingX. You'll get a lifetime trading fee discount of 15% off all your trading fees. You'll support the channel by supporting the content here. And of course, you'll support yourself in your trading journey. That 15% discount can build up to a 45% discount based on your trading volume. It takes a few moments to sign up. Click the links down below and we'll see you back in just a second. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based in your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and get stuck into it. And we are starting on the short term and building it up to the macro. So before we get really into the short term, let's give a very brief context of the macro and we'll come back to the macro in just a second. So critical levels we need to break out for Bitcoin to continue upwards. 89,000 to 88,000 is horizontal level of resistance, which is essentially the prior low of a major sideways consolidation above 100,000. And of course, our weekly downtrend, which is a representation of the downtrend we have been in essentially since the middle of January 2025. So you could almost say the entirety of 2025. If we zoom out to the weekly, we have got some major trigger points. We'll come back to these in a second. We have got the 50 EMA. We have got the 44.62 on the RSI, and we have got a similar fractal to what we have seen in the past as a representation of downtrending momentum in periods of consolidation after large expansionary moves. We'll be discussing all of this in a second. Now, why does the short term matter? Well, the short term relates to a few things. Number one, the short term is going to dictate whether or not we see a major rejection from that $89,000 level, which we are currently almost retesting, / whether or not we are going to break through that weekly downtrend right now. Remember, the weekly downtrend will remain intact for quite some time. If we fail to break through right now, it doesn't necessarily mean we won't break through at a later date, but it means at least for now, we can expect a correction rather than a direct continuation upwards. So let's talk about this short-term uptrend. If we take a look at the price action, since around the 10th through 11th of March, that $76,000 region, we have seen a pretty good uptrend for Bitcoin develop. Of course, with this uptrend, we can see momentum has been rising as per the RSI uptrend, and we have established some very clear higher lows in the process. Now, with this uptrend, we haven't yet been able to break through any critical levels of structural resistance, and we have not been able to break through any prior higher lows. These higher lows being, of course, sitting at 94 to 95,000 and, of course, 91 to 92,000. As we can see with that, the price action is looking pretty decent. However, while we are under resistance, resistance is resistance until it is not. And what we can see here is the potential for both a correction and for a continuation based on how the price action reacts, moving into this apex over the next 48 hours. Let's start with the bullish case scenario. As we know already, the bullish case scenario will simply be the price action breaking through and sustaining above the weekly downtrend. If we take a look at that on the weekly chart for confirmation, what will we really need? Well, first and foremost, from the daily perspective, we are going to need to see at least a daily close above this downtrend over here. Ideally, we want to see that close occur above the 50 EMA, and ideally what we want to see is at least a opening above the 50 EMA after we see the candle close. What does that really mean? Well, if we take a look at this instance over here, we had the candle close with the opening price with that close below. We want to at least see the candle close above, then our second candle close above to signify that the 50 EMA has essentially sustained as a level of support, and we have flipped that $89,000 level as a level of support from a level of resistance. So we do have some work to do over here for the buyers, but the first step to see any sort of reversal develop there is we need to break through this downtrend on a smaller time frame, which we have not yet done so. If we take a look at the bearish case scenario, we can see the uptrend has been respected, and we do have an uptrend on the RSI. In fact, the uptrend on the RSI massively relates to the uptrend here on the price action. We have got these equal levels of these higher lows being retested over here. Of course, what we can see here is the price action has come back down to retest yet again. So what are we watching for corrections? We are watching for that RSI to break below. If we get the RSI below, that in fact is going to be a sign the price action is likely to correct. Where are we watching for support if that occurs? We are watching the POC, so the point of control, around $84,000. We are watching our prior lows as next targets, 81,000 and 80,000. If we're looking at the higher time frame charts, the loss of 80,000 results in the price action entering this low historical resistance range, which will result in a rapid and aggressive correction for the market if that does develop. Now remember, this range over here is where the 50 EMA on the weekly chart is occupied and where that 44.62 on the weekly chart is occupied. So if we do see the price action lose 80, it is almost certain we are going to see a larger correction on the macro, potentially steeper than 76,000. So we do have a lot resting on what happens here, as what happens here on the short term in the next 48 hours is going to dictate which one of these scenarios is going to be more probable moving into the upcoming weekly close, and thus is more likely to occur next week. So we do have a lot happening and a lot resting on this price action. That is the short-term charts, guys. Let's now relate all of this to the higher time frame. So starting on the bullish case scenario, as we just mentioned, at the moment, if we flip this chart even, what you can see is Bitcoin is retesting the trend line and a major level of horizontal support. In this instance, it'd be resistance if we go back to the standard view. This level needs to break for Bitcoin to continue upwards, as we have just mentioned, okay? So while we are sitting underneath here, it doesn't write the possibility off for a steeper correction. We're not out of the woods yet. We're not, although it's looking good, we are not out of the woods. I need to stress that until we get a breakout, until we get proper confirmation, the potential for a steeper correction and a continuation lower is there. The trend is your friend until it ends. Now, I do personally wish we see a continuation upwards, but what we wish and what we hope for in the market is irrelevant to what is happening. We need to be objective and honest to what the probabilities are. So at the moment, we are under resistance. We are retesting the $89,000 level. We are under the 50 EMA. We have the potential for a short-term correction if that RSI is lost. And of course, the S&P 500 showing us some leading signs of rejections from these critical points of resistance with the DXY pushing up. It is not looking amazing. It is potentially possible for a rally, but it is not looking amazing right now. So be more cautious than anything moving into these conditions. If we move to a weekly chart, what we really want to see for the bullish case scenario is a similar pattern to what we have seen play out historically. Let's go to a logarithmic chart just for a second to make this easy to view. What we can see here is ever since we ended the bear market and entered a bull market, which was around January 2023, right on this candle over here. This is when the bear market officially ended, right? Because that is when we broke out of that macro descending channel formation, descending trend line on the RSI, as well as we had the breakout of the falling wedge structure, marking the bottom of the bear market, telling us essentially that the sellers have exhausted as we had discrepancies between the price action and the actual strength represented by the RSI, suggesting that the selling pressure that we had seen develop over the course of about 8 months had finally been absorbed and the market was ready to move upwards. Since that point, we broke out of a key level in the RSI. At the time, this was not a key level, but over the course of the last 2 years, we have proven to show that this level was a key level, as every single time we have come to the end of a consolidation, we had bounced from the 44.62. We had a horizontal consolidation here. Again, the 44.62 marked the bottom, the low bounce, before we saw a direct continuation upwards. With that direct continuation upwards, it was triggered by the RSI breaking out of a key downtrend. We had our second consolidation, again, a macro descending channel formation. If we take a look at the low bounce over here, that was the 44.62. Shortly after, breaking out of the downtrend, resulting in a strong continuation upwards. And if we look at the current price action, a very similar pattern. We have the macro downtrend in the RSI. We have a 44.62 bounce, potentially marking the bottom. But what we need next to confirm the continuation, unlike what we've seen in the past, is going to be the weekly RSI needs to break upwards here before it breaks downward. And what will determine whether or not we see an upward or downward break? You guessed it, it is going to be the $89,000 horizontal support. And what determines whether or not we break through the $89,000 horizontal support? Again, it is going to be what happens over here on the short-term price action. We are against the clock essentially for the bulls. If the bulls do not break this weekly downtrend by the 14th of April, which was when the 50 EMA crosses this downtrend, we will see the RSI break down before we see the RSI break up. And if we see the RSI break downward, we already know the price action must be under 80,000 for that to occur. And we already know that a loss of the 50 EMA and the loss of the RSI, essentially the bull market support level in terms of momentum, results in a steeper correction into these lows and potentially the 200 moving average. So you can see a lot of different dominoes are lining up here, and we are at this fork in the road point essentially. We're at this point of major decision over the next few days, over the next 48 hours for the short term here, okay? And over the next 14 days, around 2 weeks for the higher time frame for the weekly, we need to make a definitive decision. The market needs to have a definitive directional move after what we have seen over the last few months. We need to see, are we going to see now this continuation occur lower, or are we going to see that that reversal develop to the point of which we break through these prior resistances and we start to rise again? At the moment, I would say the probabilities are slightly in favor of the downward move. The reason I say that is because the momentum is not positive. We are underneath the downtrend, okay? We have got no clear bullish structure. So we're looking at strength, structure, and trend. We have got no clear structure in these prior instances, descending channels, horizontal channels. These are both consolidation formations in the moment. We do not have a clear structure. I've seen some people drawing wedges. Again, it isn't a wedge. It just simply doesn't satisfy the rules of the wedge. If we look at the strength, well, we do have negative momentum, right? We are not above the trend line, and we are looking at trend, we are under the trend. So we're looking at 3 of the validation methods we need to confirm continuations or reversals. We have none of those on the weekly chart, so the probabilities are not in favor of reversal at the moment. Now, as these things start to tick off, and for these to tick off, we need these short-term events to occur, right? We need those daily events to occur, then the probability for reversals increase, and by the time these are all ticked off, we would have already been broken out, and that would be the confirmation we need to go higher. So at the moment, the probabilities are in favor of continuations lower, but I don't think it is massively in favor. I don't think it's like a absolute defeat for the Bulls over here. I think they've got potential, but it really depends on what they do over here over the next 48 hours. And it also massively depends on, can they keep that price action above the 50 EMA and break this downtrend, break 89,000 before we lose that RSI level. Because if they can't, well, then we do run the risk of a steeper correction. Thank you for tuning in, guys. Have a fantastic day. Let's see how the market develops. I think on the short term, we are looking okay over here, but if we crack that RSI, that is going to be the sell signal. That is going to be, in my eyes, the indication that we are going to go lower over here into at least that 48,000. If we drop into the 48,000, well, we are under this uptrend. We have the risk of developing higher lows into that $80,000 region. Of course, for us to continue upwards over here, we really need to get above these prior highs. Okay, we're looking around 88,000. If we break these prior highs, well, that trend line is as good as gone, and we are likely going to continue into that 90, into that 91, into that 92 area. Again, as we talked about already, the consequences of these potential moves are going to have different impacts on the macro chart, with the macro chart being in a very delicate position over here. It is going to be of utmost significance to pay attention to how this develops over the next 2 weeks, moving into the 14th of April. But by the 14th of April, we will be well on our way for our next macro directional move, whether that be a macro move down or a macro move up. The move will be commenced. It will have commenced, and it will be starting. So, a lot to look forward to. It's been quite boring in the market, but I think the next 2 weeks and moving forward from the next 2 weeks, we're going to see a lot of volatility pick up. We're going to see a lot of directional moves pick up, and we're going to see a lot of more movement in the market. So thanks for tuning in, guys. Have a fantastic rest of your day. We'll catch you in tomorrow's video to update. We'll see you then. Bye.